Cheniere Energy capitalizes on gas price surge with aggressive buyback strategy. Hey everyone, welcome back to Millennial Money Minds. Today we're diving into some big moves happening at Cheniere Energy, the largest producer of liquefied natural gas in the US. They've been making waves lately with their financial decisions, and it's got everyone talking. From massive stock buybacks to dividend increases, Cheniere's flush with cash and making some interesting choices. Stick around as we break down what's going on and what it means for investors and the energy market. So here's the scoop. Cheniere has been raking in cash ever since Russia's invasion of Ukraine 2 years ago. Natural gas prices in Europe went through the roof, and Cheniere was perfectly positioned to sell at a premium. Even though things have cooled off a bit, the company is still swimming in cash. But here's where it gets interesting. Cheniere's got a rich person's problem. So much money that they're figuring out the best way to return it to shareholders. Their solution? Buying back a hefty chunk of their own stock. Let's dive into the numbers. In the first half of 2024 alone, Cheniere shelled out $1.7 billion buying back shares, more than they did in all of 2023. And their board just greenlit another $4 billion for buybacks through 2027. That's a massive commitment, showing their confidence in the company's future. Why are they doing buybacks? According to CFO Zach Davis, it's all about flexibility. If the stock price dips, they can jump in and buy more, basically getting their shares on sale. It's also a way to reward shareholders without the obligation of regular dividends, keeping everyone happy. But it's not just about buybacks. Cheniere is also investing in growth, expanding their facility in Corpus Christi, Texas. This expansion should start generating more revenue next year. Plus, over 90% of their production is secured with long-term contracts, giving them a predictable cash flow for years ahead. This stability makes them a unique player in a volatile market. Now, about climate change. Yes, natural gas is a fossil fuel, but many countries view it as a bridge fuel to transition away from coal, which is even dirtier. So, Cheniere's business is thriving and looks set to continue, even as the world moves towards greener energy and cleaner alternatives. Looking at the numbers, Cheniere's stock recently closed at $184.64, up about 15% from last year. That's a solid return. Plus, they increased their quarterly dividend by 15% in June. Clearly, they're focused on keeping shareholders happy and loyal. However, there's a potential hiccup. The Biden administration paused approvals for new LNG export plants earlier this year. This doesn't affect Cheniere's current plans, but it could impact future growth. It's something investors should watch closely, especially those looking for long-term gains. So, what does all this mean for you? If you're an investor, Cheniere could be a solid choice. They have a steady cash flow, are returning money to shareholders, and are investing in growth. But remember, the energy market is unpredictable, and political risks are always on the horizon, which can change the game rapidly. Even if you're not an investor, understanding companies like Cheniere is crucial. They play a significant role in the global energy market, which affects everything from home heating costs to international relations. Their decisions have wide-reaching effects on various aspects of our lives. Think about it. Cheniere isn't a small player. They're a major force in US energy. Their choices on how to use their cash can ripple through the economy. For example, their Corpus Christi expansion could create jobs and boost the local economy. On the flip side, their focus on natural gas could be seen as a delay in moving to renewable energy, a vital step for our future. It's also important to note that Cheniere's recent success is partly due to geopolitical shifts. The war in Ukraine and sanctions on Russian energy exports opened up opportunities for US LNG producers. This illustrates how our global energy system is interconnected and how events far away can impact companies here in the United States. Looking ahead, there's the question of natural gas's long-term viability. While it's cleaner than coal, it's still a fossil fuel. As the push for cleaner energy gains momentum, will Cheniere adapt? They seem confident with their long-term contracts, but it's something to monitor in the coming years. Finally, Let's consider Cheniere's buyback strategy. Buying back stock can boost share prices and earnings per share, benefiting shareholders in the short term. However, critics argue it could limit long-term investments in the company's future. It's a delicate balance that many cash-rich companies like Cheniere must navigate carefully to ensure sustainable growth. That's all for today's deep dive into Cheniere Energy. We've covered a lot of ground, from their massive buybacks to their role in the global energy market. What do you think? Is Cheniere making the right moves with all this cash? Should they be investing more in renewable energy instead? Drop your thoughts in the comments below. If you found this helpful, don't forget to like and subscribe to Millennial Money Minds for more breakdowns of the financial moves shaping our world. Thanks for watching.